All right. Question one.
All right. Which type of life insurance policy provides lifelong coverage and builds cash value? Lifelong coverage and builds cash value. That one is whole life, B.
Correct.
What is the main benefit of purchasing term life insurance? Um, is C, offers affordable premiums.
Yep.
Which type of uh, insurance policies allows the policyholder to invest sub accounts similar to mutual funds? Um, Keyword invest. I'm going with C, variable life.
Great. Next.
What happens if a policyholder stops paying premiums on a whole life policy? Um, B, the cash value may be used to cover premiums.
Correct.
Which of the following is a non-forfeiture option in a permanent life insurance policy? REC. I'm going with D, all of the above.
Yep.
What does the incontestability clause in a life insurance policy prevent? B, the insurer from denying claims after a certain period.
Yep.
What is a characteristic of a modified endowment contract? Let's see. B has limited premium payments.
No.
Is it C? Oh,
Yep. The answer is C.
That's what's gonna be my next one. Okay.
So modified endowment contracts, when you think about the word association with a modified endowment contract, is always gonna have to do with taxes.
Okay.
okay.
All you gotta remember, if you ever see modified endowment contract, it's gotta do with taxes. Now, without getting too deep and thinking in 2, 3, 4 levels, see, universal life insurance policy is supposed to be a life insurance policy, but a lot of agents sell it as an investment. So, but if you put too much premium over and above how much you actually the cost of insurance, they will make you start paying taxes. That's why it's called, it changes from a regular life insurance to a modified endowment contract.
Okay.
You got it?
Okay.
So it's related to a universal life when people are overfunding it. But without going studying the whole definition, just know if that daggum question say modified endowment contract or an MEC, they want you to know that when a policy reaches that point, you got to pay taxes on it.
Okay.
Or taxes on the distributions, rather.
Okay.
The taxes on a universal life insurance policy when it comes out, where the money comes out, is not taxable because it's considered a loan. But when you get to the level of MEC, you don't put too much money in, now it's not a loan no more.
You put too much money in there, and then you get penalties for it. Okay. Gotcha.
Right. So MEC, taxes. Next.
Which rider allows a policyholder to increase coverage without proof of insurability? C, guarantee insurability.
Yep.
What is the purpose of a waiver of a premium rider? C, waives premium payments if the insured becomes disabled.
Yep.
What is the primary advantage of a universal life policy over whole life? Is it D, higher investment returns?
No,
Oh,
B.
the answer is B.
okay.
So when you thinking, write this down. When you, if you taking notes over there, the only notes you should have on your paper right now is MEC. The word association you're looking for is taxes. With this question, when you see the word universal life, the answer is always flexible premium. Flexible,
Okay.
flexible, flexible. Whole life is going to be fixed premium. Universal has flexible premium. They always go together. Got it?
Got it.
So yeah, don't associate high investment returns with universal life. That don't go together.
Okay.
Universal life always goes with flexible premium. Those two words go together every time. And y'all make that out, or you need me to work on that.
No, I can't see that one.
Hold on.
What?
Hold on, I'm gonna fix it. All right, go ahead and answer that.
Which
Or
of the
read it.
Which of the following is a benefit of a convertible term life insurance policy? I can't see all the answers, Coach, because it's got the meeting that's being recorded right there. But
I think you can move that on your computer.
oh, can I? Oh yeah, I can. Okay. Let's see. Convertible. Okay, this one is A. It allows the insured to cover. It allows the insured to convert to permanent coverage without proof of insurability.
Yep. All right. Okay. Next.
What is the main advantage of an indexed universal life policy? C, cash value growth is tied to equity index.
Yep.
Which life insurance settlement option provides income for life? D, life income.
Yep. Oh my goodness. Hold on.
Which
All right, shoot.
which of the following policies allows the policyholder to skip premiums if there is sufficient cash value? It is going to be, is either B or D, but I'm going to go with B.
Yep. B. All right, let's talk about that because I want that to be an easy one.
Mm-hmm.
When I say, or when we understand that universal is always associated with what's the association goes with universal life.
Flexible premium.
Flexible.
So what does flexible premium means? You can increase, decrease, or skip.
Mm-hmm. Okay.
So when you read that question, basically it's the same thing. Flexible premium and skipping premiums means the same thing. So that should have been Dan B.
Got you.
Yeah.
Okay. Mm-hmm.
Right. So flexible premium means you can increase, decrease, or skip. So universal life, if they ever have that or flexible, you know it goes together. And if the cash value isn't enough to cover, to pay the premium, the policy gonna lapse anyway. You got it?
Okay. Got it.
And variable, and so the association with the word association that goes with variable is not flexible or skipping premiums. The association that goes with variable is mutual funds or investments.
Active investment. Okay.
Okay.
Got it?
Mhm.
Variable goes with the stock market. When you see the word variable, you gotta think stock market, mutual funds, not guaranteed, gotta have a securities license to go with it. That's what always should jump out at you when you see the word variable. Got it?
Got it.
Got it. A graded premium whole life policy has B, increasing premiums in early years and then level premiums.
Yep.
Which factor does not affect the cost of a life insurance policy? Ooh, the gender? No, I'm sorry. The income?
Right, income. So when let's say if somebody's getting a policy, their age, how old they are, that determines the premium. If they're healthy enough, determines the premium can be declined or rated, and gender. You know, men rates are much higher than female. Male rates are much higher than female. Got it?
Got it.
Mm-hmm. What is the primary purpose of the free look period in a life insurance policy? A,
Yep. All right. Next. You see it?
I can't see the top part. Okay. Which type of life insurance policy combines a savings?
You good?
Yeah. Which type of policy, life insurance policy combines a savings element with a death benefit? B, whole life.
Yep.
a policy loan can be taken from which type of life insurance policy? B,
Yep.
Which of the following best describes a variable life insurance policy? Okay, is it B, allows investment in sub accounts that fluctuate in value?
Yep. Yep. I was just saying that. What did you write in your notes when I said what's the word association to go with variable?
Investments,
Bam.
mutual funds, yeah.
Yep. Easy peasy. Take you 2 seconds to get it.
in a joint life policy, when does the policy typically pay for the death benefit? Joint life, it would be the first. So A.
Yep.
I can't see the
What about now?
yes. What happens if a policyholder withdraws more than the cost basis from a universal life policy? What happens if a life policyholder withdraws more than the excess amount is taxable as income?
Right. Now, this is a side note that's not on the test, but understanding this right here as relates to helping you become a good agent and helping your clients is huge. Because 99% of these insurance agents that sell whole life and universal life insurance, I don't have no pretty way to say it, but basically a lot of people on this point right here. Have you ever seen on a TikTok video or YouTube where some agent is talking about universal life, be your own bank, tax-free withdrawals? Have you ever seen that or heard that before, ever?
Mm-mm.
I don't think I've seen that one.
Well, I promise you, the competition is out here selling this like ice cream on the 4th of July, and they are lying to people because it says right here on the state exam that the excess amount is taxable as income. So they selling these insurance policies all day long, telling people about how much tax-free money they're gonna get. But in reality, according to this question right here, you know, you see right here where it says cost basis. You see that? Cost basis means how much money you put in, meaning your contributions. So the earnings are taxable. The excess amount or earnings is taxable. So for you to tell somebody it's tax-free, well, you can't unless you tell them the only part that's tax-free is you getting your own money back as tax-free, because if you actually made any, it is taxable. That would be an accurate statement.
Okay.
But when you see it on the test, you just got to know that anything over the cost basis, meaning any earnings, is taxable.
Okay.
Got it? So if on your little word association chart with universal life, earnings are taxable. Excess premiums, meaning money over what you put over the cost basis, what much basically your contribution is taxable. All right, next.
All right. Which life insurance rider provides coverage for the insured spouse and children? B. Family
Right.
term rider.
Family term, that's it, yeah. You're just making me nervous. Don't be overthinking it.
No, I heard my little ones upstairs. That was my bad.
Okay.
What is the main purpose of the spendthrift clause in a life insurance policy? Main purpose of the spendthrift clause in a life insurance policy. Is it allows a policyholder to access cash value?
No.
A, protects beneficiaries from creditors?
Yeah.
Okay.
All right. So make a note.
Yeah, go over that one, Coach. Just review that one for me. That spendthrift clause.
A spendthrift clause in a life insurance policy is a provision that protects the death benefit from being claimed by the beneficiary's creditors. Insurance funds are managed according to the policyholder's wishes and not seized or squandered.
Okay. So it's just pretty much it's going to protect the beneficiaries. In the case of
right, I'm reading. It's got like 5 different things. I don't want to get all into the weeds because it's got like 8 points, 9 points to consider. And we don't want to get into all that because then it can get confusing. So let's just stay on the surface with this spendthrift. The word association is creditors.
Okay.
If it say something about a creditor, you know the answer is spendthrift. If it say something about spendthrift, the answer is going to be something dealing with a creditor. Got it?
Got it.
Wrong. See it?
Yeah. Which policy provision prevents an insurer from canceling coverage after a specific period, even if an error was found in the application? Canceling coverage after a specific period. Is this incontestability?
Yep. They tried to be a little tricky with that. Canceling coverage meaning, Because normally when you see uncontestability clause, that means they gotta pay a claim. But they're using this, they're saying, you know, over 2 years, the insurance company gotta pay regardless. But they change the wording a little bit and saying counseling coverage. But don't let that throw you off if they change this wording around a little bit. Because you know grace period is 30 days to pay your premium. Policy loan provision is they'll take a loan on your cash value to pay the premium coverage. And a conversion option is what happens with a term policy. So the logical answer would be in contestability clause. If you just using basic word association, only thing close would have been contestability clause. So good job, TK. All right. Next.
What is the primary feature of a survivorship life insurance policy? It is B, pays out after both insurers have passed.
Yep.
Which settlement option guarantees equal payments for a specific number of years? What's this, fixed period?
Yep.
Fixed period. Okay.
Yep. And basically, once again, you ain't got to overthink it. If it's a specified number of years, that's the definition of period.
Right.
All right. See it.
What happens if an applicant for life insurance submits an application without the initial premium? What happens if an applicant for life insurance submits an application? Coverage is not beginning until the first premium is paid.
Yep. See. Hold on.
All right.
All right.
Which of the following describes the reinstatement provision in a life insurance policy? Is it A? I know reinstatement period is 5 years. Is it A?
Yep. It's A. Exactly. Yeah,
Okay.
don't worry about the 5 year part. I mean, the 5 year, they may have the question worded, but just as long as they kind of change the wording up a little bit and say reactivate. But reactivate and restating the coverage is the same thing.
Okay.
All right.